Episode 35. We crushed it again today. So if you're new, join me, mate, and you're like, this dude comes on every day and says he crushed it. I gave out XL on Friday when it was going down to 784. My options were $9 call options. Crushed it up 250%. But that's not why I'm here. So let's start it off for new people that have never seen me before. I am Matt. I track volume, I track demand, and I share it with my platform members. I created a platform. I go live every day at 4:30 to update and tell you what I saw in the market today, what we alerted, what we saw, and then I go ahead to teach some lessons. So I'm not like the other gurus who make these videos who have 500,000 subscribers who say ahead of time AMC is going up or NEO is going down or whatever is going on. We update constantly. Every day there are changes. If there's an offering or a change in demand, I alert. If I sell a position, I alert. Oh, let's go to Fisker real quick. Sold that today. Exited out. Root. That alert was a couple of 1 week old, up 15% today. I also closed out ACY yesterday. I've got a lot of stocks to talk about. So these stocks are going to help you. If you haven't heard about the stocks I'm mentioning, you want to add them to your watch list. This YouTube is free, so I'm giving you a free watch list of stocks that I'm watching because I see heavy demand, heavy volume. I'm also going to show you guys some slides, and then the last part, I answer questions. You ask me about stocks or your opinions on stocks, and you share your positions, and I will tell you whether I will hold, sell, or what I see happening with those stocks. So let's go over it real quick. Pre-market, futures were down, but I was kind of surprised because I mentioned the 10-year note was down 3 basis points and it stayed down 3 basis points all day. So that meant inflation fears have kind of stabilized, telling me it should be a stronger market, but stronger for tech than it would be for the Dow. And what happened today? Tech went up 50 points and the Dow stayed flat or went negative. Again, you have to know what to expect in the market. It's a stock picker's market. Not every stock goes up and not every stock goes down when the market goes down. So that's why, yes, we've killed it. I've been on fire for 6 straight weeks. My platform is $3.49. Now, why is it $3.49? Because I want everybody, their mother, their brother, and their sister to join. I know my rules work. I know my shit is legit. That's why I'm on here every day touting how we killed it and showing slides about people making returns. I got slides for tomorrow already. People are texting me that they've had 6 straight green days and that hasn't happened to them in months. So if you're having a red day and your P&L was down today, you're following or you're playing the wrong or you're sitting and watching the market instead of taking profit, re-entering at a lower point. And I'm going to teach some lessons real quick before we get into the wrap up. Let me just see what I have. So Dow was hesitating. So what did I tell you guys? Oh, real quick, my spreadsheet, if you're new or you follow my platform, my spreadsheet is pinned to my private Twitter platform, okay? If you're new to following my platform and you just joined today and you're like, how the hell do I get access? You must go on the website under the play-by-play. It tells you what to do. You email support@349trading.com. You provide your Twitter handle and your email address that you signed up. It's easy. And then you request private Twitter. We don't request you. You request us. If you can't follow those 3 easy steps, you're missing the alerts. So now to the alerts, all right? My options alerts since I started this platform, 51 victories, 14 losses. I'm trading at 78.5%. 78.5% of my option plays, my alerts are green. If you can't say that, you should join my platform. We're going to take over the way and change the way you guys trade. We're going to make you better traders and we're going to disrupt the institutions. That is the plan. Not to steal from them the way they've been stealing from you, but to teach you to be a better trader, to teach you to, most importantly, plan ahead. It means plan your entry for the dip, and as soon as you buy whatever option it is, and yes, I predominantly speak about options, you plan to sell it. So if you buy an option for $2 or $200, as soon as you buy it, you put it to sell it at 60% profit, which is $320. You don't watch the screen if it spikes like a lot of my stocks do. Oh, let's talk about EH. EH crossed 40 today. It's up like $15 since I alerted in like 2 weeks. EH is crushing it. I think it was up like 20% today. That's ridiculous. XL was up as high as like 15% today. I sold at $8.90 this morning. I still carried some options. I had some stock. I sold out. I'm done with XL. That's it. I alerted it on Friday. What are we? Today, Tuesday. So that's what, 2 days, 250% return on the options. That's what we do. Okay, real quick. Stocks. I'm 18 wins and 3 losses on stocks. That's 86%. So 78% for options, 86% for stocks. It's all on my spreadsheet. I alert it. Now, the great news about my platform is there's a 10-minute rule, meaning after I alert something, what does it do? It drops, and I'm transparent. So I'm going to show you a slide today where I'm down like 40%. The good news is I am positioned so damn well that when this stock goes up tomorrow and the next day, boom, it's going to explode. And yes, I believe that to be true. So everything I do is organic. Please pay this forward, share this video with somebody, share my Twitter with somebody. Everything we do is organic. I charge $3.49. We do no marketing. My retention ratio is 99%, meaning when people join my platform, they do not leave my platform. Sorry, I dropped a piece of paper. So please, just share with somebody. It's a good thing you're doing. You're paying it forward. Let's just talk about stocks real quick. These are the watch list stocks, SRNE, okay? Yesterday, up 4.5%. Pre-market, it was up 3%. I said, watch it. It's stocks we own. Delta was up 1.78%. Pre-market, it was one of the highest, 2.75%. Again, we sell at the peak. Root went up 3% yesterday, 3% pre-market. I said again, hey, pay attention. It's up 15%. It made a special move at the close. Root is great. We're returning good money on those options. EH only up 2.25% pre-market. I said that. What happened? 20%. Carnival, we liked it, 1% pre-market. It probably finished up 1%. XL was up 2.5% pre-market. Boom, it went up 15%. Again, these are stocks I follow. Tiger, TIGR. If you know TIGR, they did an offering. The stock went down. It was down 9-10% pre-market. I said it would probably finish about 4 or 5% down. I think it finished a little more. So I'm excited for Tiger. Actually, I think it moved towards the end of the day. So we'll have to check out Tiger. And then lastly, Ford took a dive this morning, but we'll have to see what turns out there. If you average down, you're already making money. When Ford dropped to $15.33, I averaged down at $15.35. I bought more call options. What happened? It spiked up to $15.70 something. I sold half my position. Again, I sold half my position yesterday. I sold half my position again today, but I'm making money. That's what we do. We sell at the peak. We buy at the dip. So those are the stocks. Oh, we'll go to those stocks during the day. So what happened? XL up 15, EH up 15, net and ET up 5%. I think it went up more. Plug was up 3%. I think it finished 2%. Root was up 10%. I think it finished up 12%. Delta was up 2%. I think it finished up 3%. And AI was up 6% at some point during the day. These are good stocks. Oh, let's talk about the dip that happened during the day, okay? So let's talk about that dip. Why did it happen? Why was there that huge sell-off in the afternoon sometime? Well, I'm going to tell you why. Because the meme stocks were going crazy and the institutions were saying like this to the retail investor. And basically, the meme stocks went back down, but they sold off. So the institutions were taking their profit. These stocks that I told you over 15%, they went down to like 8%. It's profit taking, but it was across the board. So you saw a major dip and then you saw some scare selling. So if you're part of my platform, what do we do when we sell? When people sell, we plan ahead. We wait for that dip. Somebody's scare selling their options to us on the cheap. And as soon as we get that bounce, instead of how it used to be when you traded, say you bought an option position, you check out your phone, you'd be like, how am I down 12%? I just bought this like a minute ago, 18%, 21%. How am I down 21%? The point is, that's us picking it up cheap. That's us. So instead of saying we're down 21%, we're like, oh, it almost triggered. Oh, it triggered. I bought. And then you go out for a walk. You come back 20 minutes later and you're like, look, I'm up 20%. This is how it happens. I'm going to show you slides. This shit isn't made up. I come on every day and I'm like, we killed it again today. And I don't hope that it's different. I certainly don't want to come and be like, today was a tough day. But over and over, the market struggles and my platform is killing it. It's a family platform. It's 349 trading, but it's a family. All right. So those are what I wanted to tell you. Oh, so why did it dip? So yeah, okay. So first, they were securing profit. Then, what was talking about? UVXY spikes. So, of course, we bought puts again every time. And again, you'll hear this in every one of my videos. If the UVXY spikes, okay, it's the volatility index. It's like the VIX on steroids, the VIX times 1.5. So if it spikes, we know it's going down. So we're buying puts. What happened to the UVXY? It spiked above what, $34, and it finished the day under $33, like 32 and change, or maybe it spiked at the end of the day. The point was we secured profit, so who really cares where it finishes? If it spikes again tomorrow, what are we going to do? Yes, you over there. You're going to buy puts. Exactly. Every time the UVXY spikes something significant, we buy puts. It goes down. The market settles. Now, if there's a crisis and they shut down the pipeline again, or gas prices are surging, or there's major storms, or there's something happening on in the Capitol building again, yes, the UVX could spike heavily. We're not buying puts. If it's going up like that because there's a major disaster happening or there's a war in the Middle East or something else major happens, we're not going to buy puts. The market will probably tank, so we'll be on that right direction. We'll be like, hey, the market's going to fall off a cliff. We'll sell everything and we'll take the negative direction and we'll make money because that's what we do. What else did I want to tell you guys? I told you guys why the market dropped. The MAME stocks. I also mentioned Jumia that I got in, JMIA. I see demand. Other people told me, no, I don't really see demand, but I expect Jumia to pop. So here's my stock of the day. Now, my other stocks from last week were NOx, which popped, EH, which popped, APPS, which popped, XL, which popped. So I'll give you this one. It's Jumia, JMIA. Yeah, I'm expecting it to pop. I wouldn't be surprised if I see a 10% gain. Now, again, it has to be 4-letter stock strong, which means tech has to be strong, which means inflation, the 10-year, has to stay right at where it is, 154, 155. If it bounces to 160, that is a bad thing for tech. It means borrowing is more expensive, so tech stocks usually struggle, okay? And then they flip the switch and they go to Dow stocks. So again, I'm looking for tech to be strong. Anything with 4 letters to be strong. We've mentioned eBay last week is $59. Now it's $66. We're crushing it. I think I'm ready for slides. I don't want to give you guys too many lessons, just planning ahead and averaging down. Now, if you're with me on options and you're not part of my platform, I'm going to give you one of our secrets right here. When you average down on options, you buy whatever position. I have 3 contracts. It's down 40%. Now, at that time, if you're an institution, they have an obligation to sell. When their option position is down 40 or 50%, they're selling. They're running for the door. Me and my platform, when your option position is down 40 or 50%, you double up. Meaning, if you bought 4 options to start and it's down 40 or 50%, you buy 8 options, 8 contracts, okay? It's simple math. It's no emotion. Put the emotion aside. We don't trade that way. We trade with a calculator. We trade the same way institutions trade. That's what I'm trying to teach. The way institutions trade. We buy the dip, we buy the bottom, and then we wait for the limit for the upside. We have limited risk. So I tell everybody that I tutor privately. I say, anytime you enter into any single trade, this is the most important thing. I don't care if it's stock or options. You figure out, first of all, there's never a rush. You have to be comfortable. There's not like your stock's going to explode if you miss it by 2 minutes. So what you do is you look at your trade and you say limited downside. If it goes down, I'll drop 20%. Now my upside, if the option goes up like I think it will, I'll make 80%. So if I have 80% upside, 20% downside, plus I've been crushing it lately, yes, it's a good trade. Now, if I come out and I say 60% upside, 50% downside, no, that's not a good trade. If you want to flip a coin or something like that, go to a casino, play roulette, play baccarat, flip all the coins you want. I think they even have war for the people that aren't really that creative. Yeah, you play war, you get it too. The dealer gets a king, he crushes you and takes all your money. But that's not what we do. We invest smartly. I look for demand, I look for volume, I share it. I teach you guys lessons on how to bid cheaper than the bid or ask and how to position yourselves the right way so that you don't have to pay the bid or the ask. You know exactly what the dip is going to be. We figure this out ahead of time so that when the stock dips 3%, we know the options value is going to dip 30%, and we're right there. Instead of paying $2, we pay $1.40. And when it spikes up to $1.70, all right, we're already ahead 20%. Instead of if we bought it $2 or even if we bought it $1.90 and put in for a bid and we thought we were doing something good because they told us, put in for a bid, do not pay the ask. No, we put in less than the bid. That's one of the secrets. I've also talked about nibbling. So if you missed my other videos, please, video number 3, Ask Matt, options video, okay? Options, I made an options video. You're in a shitty stock position, meaning your stock's down 30, 40, 50%. I tell you how to get out of this shit. Nobody likes to stand in shit. So that's episode 14, okay? Good wrap-ups. We have some short wrap-ups, so you don't have all the time in the world. We have like 3-minute wrap-ups where I spoke about EH last week and then it took off, and NOx, then it took off. I didn't make one about XL, but I probably should have. That's my fault. Anyway, so thank you everybody for joining me. Thank you for letting me rant for a while. We have 50 lifetime members on our platform. I cut off the lifetime membership. Right now, we're putting it on hold for a couple of weeks. Why? Because there's just too much demand, and there's only one me, and there's only one Carlos, and I don't want to cheat anybody out of their time. So each private lesson, I give you 30 minutes. Now, it's crazy how it's happened. It almost seems like every private lesson I speak to someone, and we speak about a specific stock or two, and then after we speak about it, it just shoots up, and the person's like, oh my God, my position went from negative 50% in stock to plus 80% in options and net gain of 30%. Whereas I was getting paper cuts every day because you've been in this shitty stock position for like 5 or 6 months. So please, episode 14, Ask Matt. It's a good one. Just watch it. It's very informative. In fact, everything that I try and share or teach with you guys on YouTube or even public Twitter or private Twitter, it's all informative. It's to give you value, to make you better traders. So people who are trading Nike options, I don't even look at Nike stock. The point is the person made a ridiculous return. It was like 149%. And there was one other stock where somebody made a 270% return off my episode 14. They said episode 14, I was down 40%. I just made an option to purchase a week ago. I'm up 270%. I think I'm going to sell. Yeah, I would sell up 270% too. So with that said, let's get to some questions. We got some good stuff today. Yeah, so the market was great for me at least. I think it was a shitty market today. But again, it's a stock picker's market, so you have to be in the right stocks and you have to gauge the right entry. But let's get to some questions. Can we do that, Carlos? Usually you have something going across the bottom screen. So again, please share. Oh, slides. My bad, slides. So this is what I did pre-market. I told you guys I had some ebon calls. Now, what did ebon do? Somebody bought up $3.40 ebon, like a 30,000 position pre-market. So I said it could be strong today. And then what? Crypto tanked. So that stock tanked. And then what did it finish up the day? $3.40. Forward options got pretty hurt. Tiger, I will average down. Now, why did I say I was going to average down with Tiger? Because they did an offering. All right, next slide. I have some other stuff. Delta plug. All right, FSR. It passed my alert price target yesterday. I didn't realize, so I didn't have the order in. I said today I was going to put in for $18.02. I wasn't sure it was going to get there, so I think I sold at $17.95. But from my alert, it was up $7. So I think it's like a 49% gain. Again, this was stock only, but the stock's been crushing it. I think we got into the stock 2 or 3 weeks ago. So in 2 or 3 weeks, we're crushing it. Next slide, please. Again, everything I do is transparent. Ebon, yeah, here it is. This is the alert I sent out pre-market. I said, hey, look, somebody just bought up that 40,000 share wall. Looks great. Oh, it wasn't pre-market, but it was during the market. And then what happened? We fell off a cliff. Crypto tanked even more. The stock went down to probably like 320 something, and now it's back at 340. All right, next slide, please. Again, I see demand for that stock, so I'm going to still watch it. Oh, XL. I was telling you guys this morning, look, it spiked again. Remember, it spiked yesterday. So I sold all of my stock. Again, I held on a few options. I held on to 5. I got 250% on the 5 option contracts. This stock spiked to over $9.30. I'm assuming it probably finished at like $9.15 or $9.11. I don't know. That's a good number. All right, next one, $9.12. 910. Oh, there it is. It's down at the bottom. You can't see it, but XL, somebody showed me they returned, I think, 200%. Next slide, please. Oh, this was the Tiger calls that I got. Yes, so they were $30. They were out of the money. I averaged down buying. I paid 55 cents this morning when the market opened. I thought I got a steal. As soon as I paid 55 cents or $55 per contract, it shot up to $1. Yes, $1 per. So it was above my average price. So I was actually positive on this, but I was sending out so many freaking tweets trying to educate that I didn't plan ahead, and I didn't plan to sell it at $1, which I was going to do. And then I would have bought back in where it is now at 55 cents. So the point is, when you plan ahead, you can still take the same option positions to the next day. If I had planned ahead, I would have sold these for $1 and I would have purchased. I would even pay 60 cents. Why? Because I'd make 40 cents per contract. That would be a $4,000 difference. That's how you go from green to red or from red to green. Unfortunately, today I screwed the pooch on this one. I lost about $3,600. All right, next slide, please. Oh, actually, Tiger moved at the end of the day. I bet I'm down a little less. Oh, yeah, so here it was. I was showing you guys. Again, I was showing people that I was turning from negative 40% to negative 10%, and then it basically ran flat. But instead of tweeting this, I should have been putting it in my ask order and selling it. All right, next slide, please. Okay, the Dow. So when we plan ahead to buy and sell, it doesn't matter. So this morning you sold, and then we plan to re-enter. When you get that dip at 11 a.m. and the Dow falls off the face, whether you're in Carnival or Las Vegas Sands or Delta or another airline, boom, it gets triggered. And then what happens 10 minutes later when it recovers itself like it did? You're up like 30%. The point is, that is why we try and get everything on sale. If it's stock, we look for 2, 3, 4% off. If it's options, whatever the option closed out the previous day, we're looking for 20, 30, 40% off. And then we'll nibble a little, which means we'll take an extra couple cents here and there. All right, next slide. The point is, the market, yin and yang, it goes up and down. UVXY, this was an alert I sent out. I said the UVXY was at 33.76. It actually popped to 33.80 right after I gave the alert. It wasn't at the peak, but I said, you know what? If the craziness dies down, this will go under $33 by the end of the day. And what happened? It went under $33 by like 1 p.m. 2 hours later, 76 cents. That was a 40% move if you have options. In fact, I made about 66%. I sold my options and it spiked at the end of the day. I'll do it again tomorrow. If it spikes tomorrow because of meme stocks, I will buy uvxy puts. All right, next slide, please. You can always go back to that anytime it spikes. I mentioned that earlier on. Okay, JMIA, I used an obscenity, and then I said I had to average down because it dropped off the face. As soon as I gave the alert, it literally fell like another dollar or something like that. And I said to myself, either you would scare sell, which you don't do, or you would average down properly. So I averaged down properly, and it spiked again, and it spiked 30%. I think it's around where it is now, probably. I think I'm up like 10 or 12%. All right, next slide, please. Point is, we buy the dips, we average down the right way. Oh, yeah, here it is. I was up 23%. Jumia was 32.41. I think it closed around there. So I'm going to assume I'm up like maybe like 15 or 18%. All right, next slide. It's about planning. It's about averaging down. Oh, uvxy, sorry, 102%. I guess that was 60% yesterday. The point is, if you buy the peak, you sell the dip, and vice versa. When you're buying calls, you can make 100%. So we made 100% in this. We made 100% in Nike. We made 100% in Apple. We made 100% in XL. We made over 100% in EH. All right, next slide, please. These 100% returns, if you're saying bullshit, this guy can't make 100% returns every day we do. What is this one? Oh, this was Apple. Yes, 134%. And again, we sell at the peak and we buy back at the dip. We enter in the same positions. Next slide, please. So it doesn't have to be a stock that I'm giving you. If you use my strategies and my thought process to get in and secure the best entry. So I've been talking about best entry for like 4, 6, 8 weeks now. Best entry, secure your profit, plan your exit. This dude, he blew up his small account about a month ago because he got greedy. He didn't follow the rules. I only use for trading options. I've only been trading options since I became a member. So basically, he's showing you the difference. I don't know if you guys can zoom in, but he blew up his small account and he's slowly recovering. So thank you so much. Anyway, next slide. I've got a lot of these slides tomorrow where people are just telling me this shit, where they're telling me they've had 6 straight green days, even though the market is tough, and it hasn't been that way. Somebody said their account hasn't been green since January. Okay, so that's what, 5 months. They're finally green again. It's really nice. And then somebody said, I'm playing with house money. So I'm going to share all these tomorrow. Any good slides I have. I love seeing results. What I hate is people DMing me on the side, sharing results or asking questions. Why? Because I like to do it in public. So when I answer the question, everybody learns. It's like paying special attention to one child instead of everybody. I think of this like a school or a university. I'm here to teach. And when you get smart enough, you graduate. And if you like the alerts, you stay. Our retention ratio, we didn't lose one person in the past 7 days. No one's left my platform. Only people joined. So we're growing family. We're growing platform. Please, let's ask some questions now. Let's get started with some stock. What are my thoughts on Open? I'm assuming that's probably Open Door. I don't know the stock. It's definitely a Dow play. So I would probably, I'm more interested in tech these days. Oh, Open Door Technology. So maybe I'm wrong. Let's look at the 1 month. Oh, Open Door looks great then. Open Door Technology. So what do I look at when I look at a chart? First of all, when you're looking at a chart, whether it's Robinhood or Webull or online through E-Trade or something like that, number one, always look at the line chart, okay? Don't use candlesticks. It looks like a Picasso painting. Line chart is good. Number two, I look at the 1 month, okay? Whenever you're looking at charts, here's the charts to look at before I answer this question. The 1 day, because you can find the peak and the dip. So you know you buy at the dip, you sell at the peak. That's the 1 day. The 5-day chart tells you the direction of the stock, okay? But I love the 1 month chart because the 1 month chart on all these platforms shows you demand. It shows you volume. So what do? I look at the 1 month chart. And what I will tell you here is since the stock OPEN bottomed on about 513 on May 13th, probably around $14, it's slowly and surely been edging higher, like little steps. Now, the great thing about the stock is since June 2nd, it's had 5 straight days of inflow, 5 straight days of more demand than there was selling. So it looks like they had 1 or 2 days that it might have actually went down. But overall, the last week, I'll tell you right now, it's up 18%. So yeah, the chart looks great. I don't know how high this can go because it definitely looks like it's peaking. But if it continues on to match up its previous patterns, OPEN, it could definitely gain another 25%. So it made 6% today, and I think it has the potential, the upside on stock alone of 25%, okay? The downside, if they decided to sell off, might be $1.50, might be under 10%. So this is a stock I like. So thank you for mentioning Open. It's going on my report. Now, why? It's a very bullish momentum trade. So if there is a strong day in the market, there's a good chance this stock could spike 6 to 10% if tomorrow's a good day. So if there's a dip at Open tomorrow and I buy 1, 2, 3 contracts, and then tomorrow happens to be a good day in the market and this stock spikes $1.87, boom, there's another 100% gainer. So it's about planning your entry and planning your exit and securing the best return. Good question, good stock. Next question, please, Carlos. When do I think they will pull the rug out? So I'm assuming you're talking about the whole market. When do I think it might tank or go down? If I had to make a guess of when it possibly could retract, because you understand we're in a bull market. We're like under 0.5% from all-time highs, maybe 1% in the NASDAQ, 0.5% in the Dow. We're high. So if they wanted to sell off, and when I say they, I always mention the institutions, the hedge funds, the big money, because that's who controls the market. Billions or hundreds of billions or trillions of dollars, not us who's trading 5, 10,000, 25,000, 100,000. It doesn't matter. If you're trading 500, I have slides for you. People on my platform at $84 to $584 to $2,100 to $2,600 in 5 weeks. Yeah, $84 to $2,600 in 5 weeks. This shit's crazy. So do I think they're going to pull out the rug? No, every time that they could potentially sell, meaning something happens, there's news, and the market tanks. Institutions, if they wanted to sell and cause panic, would just force sell, force everything down. Then you and I and him and her, we would all sell, and it'd be a snowball effect, and the market would give up 400, 600, 800 points in a day. The uvxy would spike, the SQQQ would spike, the SDOW would spike, all inverse ETFs. But that's not happening. Every chance they have to sell off, whether it's tech or the Dow, there's a limit. Now, you guys remember tech and the Dow. We used to have 200, 300 point days. We don't see that anymore. It's up 50, they draw it back. Now it's down 50, they pump it up. We see days where it's like plus or minus 100 or within that. That wasn't used to be. It used to be a lot more volatile. And it's now that you know the volatility is going down, that's why every day I say the uvxy goes down. They reset it at $40 like a week, maybe 2 ago. I was May 27th, I guess, so maybe 2 weeks ago. And now it's already at 33. So the equivalent is like $3.30. Point is, it lost 20%. All it does is go down. All right, next question, please. I got this Starburst that I'm staring at. Oh, if Starburst wants to sponsor me as like a snack, this would be great. I love Starburst. All right, this is my favorite TV show. Instead of wasting my time, it teaches me how to trade properly. I need more lessons. Let's go. Yes, I wish this was more entertaining. I would try and be more entertaining, except if I was, then people would be like, who is this freaking idiot telling jokes? I'm out of here, and they would leave. But I want everybody to stay. I want everybody to get certain value from this. So at the end of this, I'm going to mention a couple more stocks so that you get some real value heading into tomorrow. EH, it closed above 40. Yeah, $25 to 40. My options were the $25 options that became worth $1,700 today, and I paid $520 for them. So you do the math. That's over 200% return. Tiger also closed above $25. Somebody is very bullish Tiger. So I'm going to talk about Tiger. I was going to talk about it later. That I'm so happy that I'm set up. So anybody that wants to take a second with me, open your phone, go to whatever platform you use, look up Tiger, look at the 1 month. This is what I do for my privates, by the way. When I show you guys demand and stuff like that, I'll teach you guys like I'm doing a private. So let's go to Tiger. All right, let's everybody go to Tiger, and you're going to look at the 1 month chart. And I'm sorry for anybody that's got the private. So you look at the 1 month chart, and then you look at May 24th, all right? Volume was like this. It was an outflow day 3 days in a row. May 25th, what happened? Volume spiked. It was an inflow day. Volume was 5 times as great. And then what did you see? You saw Tiger go from $16 all the way up to like $26, $27. Now, today, what happened? Actually, there was more inflow today. It was more outflow, but now it's more inflow today, which is telling me I'm positioned so well, Tiger. So please, still look at the 1 month chart. Then you'll look at it. There were 2 days of outflow, okay? June 2nd and June 7th, there were outflow, but the outflow was small. So days that they're inflow, it's like this. Days that they're outflow, volume is light. So today actually was an outflow day, but there was more buying at the end of the day, which is just telling me Tiger is set up and ready to roll. Now, I don't care if it's, I would love for them not to have done an offering, but the point is I'm showing you guys how to look at demand and volume. Look at the 1 month, See the spikes. The bigger the volume is, that's good. It has to be green. If it's red and it's outflow and it gets larger and larger, people are selling. You better freaking run unless you can call the bottom. And even when I call the bottom, I'm wrong. So yes, I'm very bullish on Tiger. I have a great position. I'm down 40%, but I think I have over 100 contracts. And Jumia, I think I have like 160 or 170 contracts. I'm waiting for that 10% pop on Jumia. I mean, my mouth is watering. So although my P&L today actually went down by a few $1,000s, I still have ebon options, which spiked. But my P&L might have lost like $1,000 or $2,000 at the end of the day. But I consider myself positioned extremely well. If tech is strong tomorrow, and I'm saying a prayer right now, but if tech is strong tomorrow, those two stocks, I expect them to take off, especially if Tiger comes out with news like they had, they were getting some type of something to let them allow their Chinese to trade, because China is very strict on trading U.S. securities. Anyway, I don't want to confuse it. Let's go on. I'm looking for a good day tomorrow. I'm pretty excited about tomorrow, actually. I kind of wish it was tomorrow already. All right, Southern Exposure. If we all share, Matt will have a 500,000 subscribers in no time. Yes, so please like this video. I don't know if that actually matters anymore. Someone told me it doesn't, but please share. Now, if people were actually leaving my platform, I would tell you guys, shit, maybe it's not true, but this shit is legit. The fact that our retention ratio, anybody knows what retention ratio, it means once you join on, you just don't leave. Like you're just stuck there forever. Yes, it's 50 cents a day. I provide probably 10 times, no, probably 100 times that to my followers, because my followers make 3,000, 6,000. I saw 12,000 today. It's ridiculous. So my cut of that is 50 cents. That's what you're paying. I build a platform. I share it with Carlos. We have another partner. I haven't even received any money yet. So the good news is I just love you. I love doing this. I love teaching. Please share this video. Share it. That's the only way. That's the only way we grow, and we grow as a family. Hey, Matt, what's my projection for the SDOW? I have options. Okay, so you're still in options. I sold half of my position in that yesterday and half of my Ford yesterday. I bought more again today for both of those. And then right before it closed, I sold half and half. So it seems to be a good strategy because I'm securing profit. I'm re-entering when the SDOW, for me, I want it to dip because I have puts. So when it spikes, when the Dow's down the most, that's when I'm buying puts, okay? So my projection, the Dow finished what? I'm going to give you actual projection here because I'm going to give you numbers. Because if you guys are here, and it's good to make predictions about everything. So I'm going to go to the Dow. The Dow was off 30 points today. Outflow was strong. Here's what's going to happen tomorrow. It's either going to happen tomorrow, which is what, Thursday or Friday. So you guys want a prediction? I'm predicting it both for tech and the Dow. One day is going to be extremely strong. So I don't know if it's going to be tomorrow or I don't know if it's going to be Thursday. But I'm looking at the chart, and outflow has been strong in 7 of the last 10 days for the Dow, and yet the Dow is higher. So outflow is going, yet the market is moving higher. That is a positive sign. What's going to happen is people are going to say on the sidelines, and they have all these bags of money. Maybe you have a lot of money on the sidelines too, and you're going, I'm waiting for the market to fall. I'm waiting for the market to fall. But it's not. It keeps going up higher and higher. So they're going to have FOMO. These institutions need to do something with their money. So what are they going to do? They're going to buy stock. That's exactly what they're going to do. They're going to have FOMO one of these days. I don't know if it's tomorrow or the next day. I just have this gut feeling that the market's going to do well. Now, it's not going to do 300 points well. But if each average, the Dow and tech finished over 100 points, that would be a strong day. 120, 150, strong day for my stocks. Why? I'm a stock picker right now. So my stocks are more volatile. On good days, boom, 10%. On bad days, 1%. 2%. It's still holding strong. If your stocks got wrecked today, you're in the wrong stocks, bro. You're in the wrong stocks. Whoever I'm talking to, if your positions are red today, you're in the wrong stocks. Watch my episodes, watch 3 episodes back. Just hear the stocks that I speak about. Make a watch list. Then we do these questions and answers at the end. And some stocks, I'm like, oh, that looks really good. And somebody mentioned a biotech stock the other day. Boom, it exploded. Now, I don't like Clover. Clover has become a meme stock. CLOV, I think it's up 70%. They're probably messing with it after hours. They seem to have left AMC a little and GameStop. I mean, it's crazy. If they have this much money on the side and I could educate, imagine if I could educate all the Reddit people. So they were taking their hundreds of millions of dollars and investing it the right way and buying dips and selling the spike. The market would be volatile, but we'd all be cashing in. And you know who would be suffering? The institutions. That's right, institutions. Yup, share this video. Institutions suck. Oh, let's talk about Jim Cramer real quick. Tell this to Jim Cramer. You know why? Because XL crushed it. He's a pussy. He's set to sell XL at 21 or 20, something like that, after he touted it and made it and said it was the greatest stock since sliced bread. And then what happened? At like $7.70 something, he said it's still a piece of poop and that the shorts were winning. You know what, Jim Cramer? Wrong again. All right, next question, please. Sorry, I like to comment on him every day. He's such a sellout, man. You guys should share this. Tweet Jim Cramer, share the video, everything like that. Alex Wong just signed up. It's about time, man. Alex has been following me on public Twitter and love to make comments. And now he's following me on the platform, which is great. Okay, so Hilton, just like Neo, just like other Plug, Blink, all those companies, EV plays, energy plays. Yeah, the stock looks good. 1, 2, 3, 4, 5. 5 out of the last 6 days, more inflow than outflow. It doesn't mean the stock went up 5 out of 6 days. But let's see. June 2nd and June 9th today. Huge volume for Hilton. So what did it do today? Oh, it moved 11.5%. I would not be buying that stock today because stocks just don't only go up. I mean, you're asking me if Hilton looks like how would that be? Like that. There, this would be the chart. Like that, right? So you're saying, okay, it's just going to go up. And what is it going to go up even higher? No, it's got to consolidate a little. So what happens? Hopefully tomorrow will be green for you, and it'll be that big, strong day that I've been speaking about, and you get another 10%. But if tomorrow is strong, and this is a warning for everybody, if tomorrow is strong, 100 points strong for the Dow and tech, I would be selling before the end of the day tomorrow. Why? Because it looks like I love patterns, and that's what looks like it's going to happen. If tomorrow's a strong day, I would think Thursday is not going to be a strong day. All right. If tomorrow is a weekday, then yeah, I'm telling you right now, you have 100% conviction for me that Thursday will be strong because I believe one of those 2 days is the Dow's going to move 100 points. All right. So next question. Yeah, I like the stock. The whole industry looks good, except for, that one looks like it's just a little high. What do I think about Bambi? That was a good movie. I like deer. I would never eat deer. All right. BMBI. What are those, like father jokes? BMBI. Yeah. BMBI is Bright Minds. Is an OTC or it's an ETF. If it's an OTC that you're talking about, it looks like shit and there's absolutely no volume. So hopefully you're not talking about that. If you're talking about maybe it's BMB. Is that BL? That could be it. Maybe it's Bumble. BMBL. There you go. Thank God. I thought you were talking about a crazy stock. So what do I see on Bumble? I see extremely light volume. I would not get involved with this stock. In fact, outflow has been greater, and the outflow today and yesterday has been greater. So what do I expect to happen? I expect it to bleed exactly as it did today. It finished down 0.75%, so about 34 cents. I expect it to lose about 50 cents tomorrow, 50 cents the next day, 50 cents the next day. I don't like this stock unless they have some type of catalyst, but I don't think so, especially with society opening up, more people using dating apps. I don't know. Next question, please. I don't like the stock. I would sell it. All right, what do I think about CRM? CRM, I do know is Salesforce, and I think the chart looked better in the beginning of the day, if I remember, because I always like to keep an eye on Salesforce, and I think it looked bad at the end of the day. So there was more outflow today, and let's see if I was right about the chart. Yes, the beginning of the day looked good. All right, now looking at the 5-day, this definitely looks like it could be a little valley there. So if fintech is strong, so you're watching Square, you're watching PayPal, you're watching other stocks that are related to fintech. If fintech is strong, and I consider Salesforce in that because it's all technology and sales up, it looks like it either could turn really strong higher. And when I say really strong higher, I mean it looks like it could bump up probably to 245, which would be about 4%. So yeah, I happen to like Salesforce. I will always like Salesforce until proven otherwise. A lot of companies use Salesforce for tracking their sales and generating leads and things like that. I like Salesforce, Ken. Next question, please. But let's look at the 1-month chart anyway. The 1-month chart, heavy selling, it still went up. Heavy selling, it still went up. And that was like a week ago. And now it's very light. But 3 of the last 5 days were inflow, better than outflow. So I like those. Okay, Trit earnings are the 18th, supposedly. Any advice on July calls? So I've been talking about TRIT a long time ago. I think I started talking about it in February. I got it at $6.88. It went up, it went down, it went sideways. There was absolutely no volume. I'm going to look at the volume for TRIT. Now, it used to do 3 to 6 million shares a day, and now I think it does under a million. 421,000 today. Greater inflow. The point is, a lot of you are in TRIT because you heard it was heavily shorted. If it was heavily shorted with no volume like this, it basically means with $2.5 million, I could buy or sell all the shares. I could force this stock down. So I do not believe it's heavily shorted. So now, yes, you have to wait for earnings. If earnings come out, now I was talking about this stock a long time ago. Their customer base and their earnings kept doubling and doubling and doubling. So that's what I expected in December. When they delayed it from February to March, from March to April, it kind of sounded bad, but I do expect when earnings come out, this stock to pop, 20, 30, 40%. So yeah, I mean, you're taking a chance. Hopefully they're cheap enough. Now, if you expect stock movement, I would buy the $5 calls because they're in the money. If you buy the $7.50 calls, you better get them darn cheap because they're out of the money and you would need the stock to move at least 20% just to break even, probably 30%. That's why I like in the money. If you're part of my platform, all of my option rules are on the website. Do not break the rules, okay? There are rules. We only buy dips. We only buy in or out the money. We use a 25% rule, which means if you have $5,000, you use a quarter of that, $1,250 for a first position. If it goes down 40%, boom, there's your second position. It's all listed. Examples are listed, etc. Next question, please. Good question, Derek. I like the stock. Hey, Matt, I hopped on Mara on the dip this morning. I bet you crushed it already. $22 strikes. So I'm hoping that's in or out the money, June 18th. So you gave yourself enough time. I don't know if June 18th is the next strike date, expiration date, but maybe you could have chose June 11th. I like that you gave yourself more time. I'm up 49%. Would I sell on peak tomorrow or give Bitcoin to recover above 35,000? If tech is strong, I would sell on the peak tomorrow. Again, if I think tomorrow is going to be a good day and tech is strong, I think tomorrow will be good. The next day will be weak. So I would look to sell. Now, what are you at? You're at 49% right now. I would shoot for over 100% return. I'd probably put in pre-market. I would probably plan for like 122%. I would figure it out. I would figure out the options price and I would put that into my ask and I would turn off the computer, close the computer, turn your phone off. It doesn't matter. If it spikes, it will probably get executed. And there you go. You'll have 150% gainer. How? We bought the dips. It's not like Mara is a great freaking stock right now. Bitcoin's struggling. Tech is struggling today. It was up, down, whatever. The point is you can make any trade a good trade as long as you buy the most bottomest dip you could find. And if it still just hovers or goes down like Tiger did most of today, at least you're limiting your downside. The point is you're waiting for that turn up. That's what we're all waiting for. Limit your downside, limit your risk, max value, max value. Next question. Yeah, so what would I do? I would sell it. I would put in pre-market and I would go to make 150%. AHT. So this is a hotel play, return to society play. I scalped it the other morning for about 30 cents. It was a couple $100. It wasn't anything great. Oh my God, it went up 20% today. How come every time I scalp something and I make like 1 or 2%, it goes up like 20% the next day? Yesterday, it actually went down. So I thought, okay, I saved 20 cents. At least I scalped it. And today it's up 20%. It's up over $1. I don't remember how many shares I had. I think I had 1,000 shares. I don't care. Money is money. $1, $1,000. Small piles become big piles. Every $1,000 counts. So yeah, there was huge demand today. Now, if there's more inflow again tomorrow, it could be good. But what's been happening with this stock is every time it spikes, it consolidates at a lower level, a lower high. So I mean, it goes up 20%. Tomorrow it'll go down to 6%. It'll hang out there for a day or two, and then it'll spike again. That's what they've been doing with that stock. Thank you for joining the platform, Ryan. I know you're only a couple days old. You'll figure it out. Oh, so somebody wrote me today on public Twitter, and I had to ban the guy from following me on public Twitter. He was like, hey, I signed up for your platform. Now what? I don't get any alerts. Yes, that's because we use private Twitter. If you're on it, please go on my website, go to the play-by-play. It tells you what you have to do. You email support with 2 things, and then you request private Twitter, and boom, you're part of the platform again. FSR after hours. Oh, don't tell me it's moving. I sold my stock. I sold my options. I made a killer return. Options, I made over 100%. And the stock, I made 44%. And what is it doing after hours? That's up 3%. That's not doing that great after hours. I thought it was up like 30%. If you guys get me excited and tell me something's moving, it better be moving. Because some people tweet me, they're like, oh no, did you see that? And I'm like, oh shit, what happened? And I go and look at the stock and it's off like 20 cents. Someone tweeted me, Delta, what's happening with Delta? It's tanking. And I looked yesterday and it was off 12 cents. And I'm like, the hell are you doing, man? He's giving me a heart attack. Oh my God, Delta, here we go. Delta had more outflow than inflow today, but ended up the day. How should we understand that? Well, I already mentioned that. When there's more outflow than inflow, again, more people selling than people buying, and the stock is going up like that, okay? That is a good sign, okay? When there's more inflow and the stock is going down, that means people are selling cheap. Again, I like Delta. I like the airlines. Anytime you want to check on the airlines, Go to the TSA website. It's public information. Look how many people traveled today versus yesterday versus tomorrow versus the next, So you look at Memorial Day weekend, crushed it. Millions of people are traveling again. Yes, a lot of the country is vaccinated. South Florida is great. The mask, so everything's getting a little better. I expect airlines to do well. My Delta Airlines options go out till September. That's my safe play. Instead of buying $2,000 or 2,000 shares of Delta and paying like $80,000, I would rather put my money, 5 or 10,000, in my Delta Airlines options. Oh, watch my options video. Less than 2 weeks old. I use Delta as an example. I think it's going to return between 100 and 400%. But basically, I simplify options. So yes, if you're having troubles with options, episode 3 or my options video, please. FSR was over 19 when you originally sent that. Thank you very much. Yeah, okay. 19 is good. If I was still there, then I'd be upset at myself. No, my 2 positions that I'm happy going forward with tomorrow are Tiger and Jumia. All right? That's what it hit. Hit the like button. Yeah, hit the like button. Love is great. Love's crushing it. Her account is higher than mine. We were back and forth. I was ahead of her. She showed me her results from this morning. She is definitely ahead of me. Again, my P&L was off a few $1,000s today, but I believe I'm positioned well. Ivan, you're down 29% on your 618 $5 strikes with an average of 75 cents. SMSI. Volume not there. My thoughts. Okay, so if volume was there, okay, and you have 2 weeks left or a week and a couple of days, you could technically average down. If you were down 40% and you thought the stock would turn around, according to my rules on my platform, you would be able to buy double the amount of options. So say you had 2, you would buy 4. Now let's actually look at this stock and see how good or bad it is. SMSI, Smith Microsoft. Never heard of it. It's up 10 cents today at $5.44. Yeah, that's probably your stock. So let's look at the 1 month. You're okay, dude. Volume's not off the chart, but volume before May 30th or whatever, May 29th, whatever the last day in May was completely poop. So right now, if you just saw 300,000 today, before that, it was probably 100,000 each day, which means the stock can easily be manipulated. Now, the chart on this, the 1 month looks decent. The last 2 days were decent. So if you average down, how can you still be down? You didn't average down then. You took your initial position and you probably bought it, 4 or 5 days ago on the spike. I'm going to guess you bought your initial position May 30th. And if you're still here, please answer the question. Did you buy your initial position May 30th or June 1st thinking it was going to spike even higher? If you did, that's probably why you were down, because this chart looks damn good. And if you bought the dip, you should probably be making money. With that said, you have an extra week or so. Yeah, I would hold on to those. Try and make your money back. If you want, add 1 or 2 more options to average down. I wouldn't tell you to double your position because you're only down 29%. You're now down 40%. Now, if this stock was down today, which it was, no, it was a little higher. It wasn't really down. So you could have averaged that morning open. You would have averaged down. But other than that, you probably are just a wait and see. You're just a watcher right now. But you have 2 weeks, so you're a week and a half. You're okay. Next question, please. Oh, I never ate this Starburst. I just peeled it. What are my thoughts on Wish? Now, I think the Wish, didn't Wish... Or no, that's Washington Post or something has been crushing it. Something's been crushing it. Wish is what? Wish content or Wish? Yeah, context logic. And yes. Oh, no, it did spike. This is the one that spiked yesterday a little and then spiked again today. There was huge volume. Yes, $209 million, up 49%. Yes, I don't play around with stocks like that because what's the true valuation? Is it $11.63? Because yesterday it was $8. Or is it more? Is it $15? It was everybody buying in today because $15 is the true price. And is it $15? Is it going to take 6 months to get there or is it going to get there tomorrow? So it's very risky. If you buy something like this, what did it start? It just started today. It started the movement. It was $7.83. Now it's $11.63. I'm assuming after hours it probably spiked. Yeah, it spiked. Because anytime you get a run like this, people love to buy it after hours. Oh, it's going to go up higher. Oh, it's going to do this. Oh, I'm going to make 100% return. No, what it's going to cause is it's going to cause bag holders. Anybody that got in at $12.89 or higher, it's $12.44 after hours. So it's up 80 cents after hours right now. But anybody that got in higher than that, $13.42 some people were buying. $13.42. Imagine you bought it $13.42 and it's $11.63 at open. How can you be down like 19% on stock? Thank God there are no options. You guys would love options on this. So, yeah, let me look at the 3-month chart on this. The chart's really hard. If you give me 200 million volume tomorrow, yeah, I'll tell you it's going to go up another 50%. But if volume somehow goes back to like, what's the average volume on this? The average volume is 12 million. So you're up like what? 15 times, 16 times the average volume. If tomorrow the volume is 11 million again, guess what? They could be selling it off. So no, I don't like stocks like that. Any stock that runs up 100%. Let's go back to Brooklyn Therapeutics, BTX. It ran from like $12 all the way up to $100. And I told you guys along the way, I'd be selling. I think it's like $15. And then the other day, someone's like, oh, look, it's up 50 cents today. Yeah, but it's not good if you had an average of $62. So be very careful around stocks like that. Next question, please. Starburst looks good. Hey, Matt. Thoughts on CTRM? Are you kidding me, Ryan? If you're part of my platform, you know that Castor Marine is a big piece of shit and that I mentioned it at $2 before it did that reverse split. And I'm thinking of the right stock. I think it's probably $3 and change or $4 now off like a 10-to-1 reverse split. $3.35. I mean, get the hell out. No, I won't even look at the chart. I don't care if it goes up. What's going to go up to $4? No, Castor Marine is a piece of shit. They did an offering at $1. It went down to 50 cents. I don't like penny stocks. And although they did a 10-for-1 reverse split, it's still a penny stock. It's still a piece of shit. Yeah, what about Sundial, Matt? I thought you hated Sundial. Yes, Sundial is a piece of shit. Naked Beverage is a piece of shit. And if you're in any of these stocks, then you play too many meme stocks, MEME, and you watch the Reddit boys too much time because there's no valuation in Naked Beverage or Sundial. And I buy my weed from my dealer, and I have a weed cart, and I never use any of those places. Fluid, Sundial, any of that bullshit. You know how much weed they need to sell? Next question, please. Hello, AMD, please. Okay, so AMD struggled yesterday, fell off, and then there was a little pickup at the end of the day, but the volume wasn't there. So I'm not crazy about AMD. Now, as I say that, AMD could actually spike like 10%. It's when it consolidates, it just hangs out around here for like 5-6 days. There is strong demand. Volume of selling off 2 days in a row. It only lost 0.5% each day. So it's telling me on a green inflow day, this stock will pop. So yes, AMD's okay, James. Hang out there. Wait for the green day. Wait for the inflow day. It's coming. All right, next question. AMD is a decent stock. Probably should be mid-90s. Now, any stock that I give out or that I like, if Jim Cramer gives it out or he likes it like he says AMD, then please tell me because I will take the opposite position. I don't want to be involved. If he picks my stock, I get the hell out. You just joined the 349 family. Let's make that cheddar. Yeah, we've been crushing it, dude. All these slides I put up every day, so go back and watch my YouTubes. We crush 100% return. It's about in, out. Now, if you just joined my platform, on the website, I have all my rules, lessons, and psychology of trading. I mention that a lot, but I want you guys to read it over and over again until it's intuitive, until you feel exactly what to do. All right. That's okay. CCIV struggled today. I'm in at $19 strike on 2 calls. Expiration, you're at 250. It always seems to recover, but next week, blah. Okay. I don't even really have to look at this because you're the dude that doesn't know how to secure profit. You mentioned it before on the platform, and I get that. And it's okay because I'm going to help you. So if it's currently at $2.50, what you do is you put in for a profit of 50% or 60%, multiply it up. 50% would be $3.75. If you nibble, I'd put in an order to sell $3.88 tomorrow. And when it spikes, you sell. And when it dips, you buy the same position. You stop worrying about it. You can make 60% on this position 4 times in the last week and a half since it was 19. 60% on 4 different days. Sell at the peak, buy at the dip, plan ahead. All right. Every morning before the market opens, that's when you put in your order. Okay. Your option's worth $4. You want to make 50%? Great. You're selling it at $6. You don't give a shit when it happens. And if I tell you, oh, it went up higher, you don't care. Again, we're looking to secure the same profit every day. 50%, 60%, 80%, 100%, uvxy, 110%. All right. Next question. I will look at CCIV for you real quick, but I know what it does every day. Every day it has a wide range. So if you sell at the top and buy at the bottom, okay, volume was extremely heavy today, which meant it consolidated today, okay? Volume's been heavy for 5-6 straight days since the stock was 20. The stock is now 26, but volume has been equal on both sides. So the stock went from 20 to 26, which is 30% gain, all right, in about 5 days. Do you get that? There's going to be consolidation, meaning profit taking. But yes, that's a good sign for the stock. I would not be surprised if it sees $30 soon. Bad idea to eat the Starburst. Okay, what do I think about close? Insane amount over the past few days. It's a main play, and I wouldn't touch it. I thought it'd be a nice play, but you ended up selling for a loss. Yes, everybody sells for a loss that tries to get involved with these main stocks. AMC, GameStop, unless your timing's perfect, unless you're calling the bottom and you have strategy. So what is strategy on Clove? You buy Clove at whatever it is, $20. You put it for a 10% gain. If you think it's going to pop 70%, you're killing yourself and you're going to be bag holding. When Clove goes back down, you're going to be bag holding. Clove will be $8. You'll be saying my bags are $21. That's the dumbest thing. Not you're the dumbest thing. It's the riskiest thing to do. You're investing the wrong way. Follow the rules. Find stocks that have demand and volume, not stocks that are up 80% in one day. That's just ridiculous. Next question, please. Okay. Thoughts on MUDs, the Spack merging with Tops? Yeah, I know who they are. I hate SPACs. So I'll go on record. I hate SPACs. This one is not so bad because I know Tops baseball cards, but the same way that they used to sell $1 billion worth of cards to the people in the 1980s and 1990s, and they overproduced and mass-produced it. I have no doubt that whatever Tops does, they're going to get greedy again. If they're doing NFTs, they'll get greedy. The volume and demand sucks. The stock's at $12. You have $15 calls. I'm sorry for you. It looks terrible. Hopefully, you can get your money. $15 calls. Let's just look what they're at. 129 days out. Okay, they're at like $1.50. So what I might do is I might keep those calls and I might sell the $20 calls or something like that. That way, if the stock goes up to $20, you get all that profit. You can make 200%. And then you sell the next calls up the level, which are the $20 calls for 80 cents. So you're recouping half of your investment by selling the calls that are $5 higher. Plus, if you're right, you're good. And if you're wrong, guess what? You just saved half your investment. If you put in $5,000, you're going to get $2,500 back. It makes a lot of sense. Next question. You could do that for other things. If you think your stock's going to spike, you want to do options on something risky like OCGN or something else that's moving like 50 or Clove. You want to buy options on Clove? Great. You buy the $25 calls and then you sell the $35 calls, okay? You make some of your money back. Jumia, I already spoke again. Again, I like it. I think you mean Jumia, not Jimia. I'll look if there's a Jimia. If there is a Jimia, then I apologize. JIMA. There's a JP Morgan bond fund, but I don't think you're talking about that. Jumia already spoke about. Go back, watch the beginning of this episode. All right, thoughts on Fastly? Yes, Fastly used to be a client of mine. I used to produce their promotional material. I don't like them as a company. I don't think they're run well. I know that it gapped down. You have an average of $52 a share. Gap filled today, still got more room to run. It really filled the gap today. If it did, it's got to be Reddit, boys, because I wouldn't be buying Fastly at all. I'll tell you that much. Okay. It filled the gap. It went up 10% today. No, I'd be taking profit. I would definitely be taking profit on Fastly. I don't think it's a well-run company. Now, whether Wall Street knows that it's not a well-run company or not, that's up to Wall Street. The stock could go much higher. The story can come out 6 months from now that their books suck and that they don't run the company well. But it doesn't mean the stock can't go higher. So me personally, I don't like the stock. Good job if you filled the gap today and you got in there and you profited. But if you're looking to chase after a stock goes up $10 or 20% in one day, then you're not following the rules. We don't chase stocks. A stock goes up 20%. We're looking for it to come back to earth, all right? That's just how it is. I wouldn't get involved with Virgin Galactic either. And even though I was talking about that at $20 a share, I think that's well over $36 now. No one brought it up, but I did. So let's look at it just for everybody else because somebody must be thinking it. Virgin Galactic up 8% today to basically $38. I mean, off the charts. The valuation is still poor. It could be worth $120, but they have no revenue. So that's my thought process. I want stocks with revenue. When and how to decide options only or stock play options? How do I decide? It's always risk versus reward. If I like a stock long term, I will alert it to stock only. That lets me average down over time if I need and I can build up my position. If I think the stock's about to bust out, like I did with XL or EH, then it's an options play. When I think the market's going to stabilize and the uvxy is going down, that's an options play. Other than that, I always mention either stock or options, but that's how I pick it. It's always risk adverse, so it's less risk, more return. If I think it could take more time, I don't want to do an option because when you do options, you're paying for time. All right, next question, please. You're trying to get into day trading. I don't know, for paper trading, I think, I don't know if Robinhood does paper trading. I know Webull, Webull, does paper trading. But if you paper trade the correct way, meaning don't be stupid and be like, I bought 100,000 shares of AMC. Look, I'm up 20%. I made $2 million. No, Pretend like you have $1,000 in your account and this is real money. And I want to trade this option. I'm going to buy one option for $120. If it goes down, I'm going to follow match rule. If it goes up, I'm going to do this and secure profit. Trade the same way. So if you buy an option paper trading, guess what? As soon as you buy it, enter the trade to sell it in case it spikes. I don't care, real money, fake money, who cares? I want you to be successful at what you're doing. And these are some people, I spoke to some people today that have been trading for over 20 years. And they're like, the things you mentioned, the way you simplify, it completely makes sense. So yes, thank you for telling me that today. All right, next question, please, or next comment. Hey, Matt, I'm up $350 this week. It's been a min since that happened. Thank you. Yes, that's great. I love to hear that. Again, it's Stock Pickers Market. Lifetime member now. I saw that, Greg. You're already doubled your account after following me. Yeah, just imagine when we speak. I don't know where your account is, but I'm assuming it's somewhat decent. When we speak, I'll tell you where it could potentially end up at the end of the year. And then I talk about nibbling, and I'll tell you what you could save on that. So anybody that has $15,000 in an account and you're trading options from now until the end of the year, based on the number of options you're trading, if you nibble, which is what I spoke about on previous episodes, then you can make an extra 5 or 10,000. So if you're already going to be a good trader, you can add that. Russ, I followed the rules today. I was down $1,000 on my forward contracts that expire Friday. I bought the same amount again at the lower price, and then I was up 400. Sell by Friday. Yes, Russ, you bought the same amount, like the same amount dollars, because if you're talking about contracts and you had 5 contracts, you had to buy 10 contracts. You have to buy double. Yes, it is quitting time. You guys are great. Thank you for joining me today. Today was better than yesterday, but not as good as Thursday or Friday. Remember, Friday we had our $1 million day, our second $1 million day. It happens on Friday. It happens when uvxy spikes and then goes down. Hopefully we'll find something else to make us $1 million. We did pretty damn good on XL. I'm not going to lie about that. So when everybody was struggling in the market yesterday and today, we were killing it. Love my platform. Love the family members. Thank you, Carlos.